Yesterday, the euro and the British pound slid, weighed down by strong data on US retail sales. The indicator rose by 0.7% month-over-month in July. On an annual basis, US retail sales surged by 1%. The readings turned out to be far above analysts' forecasts. Nevertheless, bulls managed to seize the moment and recoup losses, bringing the price back to the sideways range. Data on economic sentiment in the euro area and Germany also topped estimates, which contributed to the euro's recovery and then enabled it to enter a bullish correction. Speaking of the pound sterling, today's macroeconomic calendar is full of important news releases from the UK, including data on consumer prices. Annual inflation is forecast to slow down by 6.7% in July. On a monthly basis, analysts are expecting to see a decline of 0.5%. If inflation pressures ease, the British pound is likely to extend weakness. Besides, traders may take notice of reports on GDP and industrial production in the euro area. If the readings match preliminary estimates, the market will hardly see any significant price changes. However, if data shows a greater than expected decline in industrial production, the euro will come under pressure. Furthermore, it's worth paying attention to US statistics on building permits, housing starts, as well as industrial production. Upbeat data on the US housing market could help the greenback hold steady against the euro and the British pound. The focus of traders will be on minutes from the Federal Reserve's July meeting. Policymakers will probably reiterate that their best indicators shaping monetary policy are inflation trends, retail sales, and labor market numbers. Thus, the minutes will hardly have a severe impact on market sentiment. After a surge in volatility, trading is expected to remain range-bound. And now let's move on to technical analysis. According to the 1-hour chart, the euro-dollar pair is currently trading at 1.0915. A false breakout at this level will create a strong sell signal, thus bringing the euro down to 1.0878. Long positions at this mark, the lower boundary of the sideways range, can be considered only amid a false breakout. If the euro extends losses, it will be possible to go long on a rebound at 1.0836 or 1.0808, counting on an intraday correction of 30-35 pips. In a bull case scenario, if the price breaks through and consolidates above 1.0915, a buy signal will be generated. Thus, Europe's single currency will surge to 1.0952 and probably 1.0982. At the level of 1.0982, I recommend going short on a rebound to catch an intraday correction of 25-30 pips. Short positions at 1.0952 can be opened only in the event of a false breakout. As for the British pound, traders have just received UK inflation data. The Office for National Statistics reported that the consumer price index rose by 6.8% in the year to July, down from 7.9% in June. Against this background, sterling is trading upwards. A false breakout at 1.2722 or 1.2749 will make it possible to go short. As long as the price is above 1.2688, the pound sterling has every chance of gaining strong upside momentum. Alternatively, if the price breaks below 1.2688 and tests it from the bottom up, the market will face a major sell-off, with the British currency dipping to 1.2658 and 1.2623. At the level of 1.2623, traders are recommended to go long on a rebound, counting on an intraday correction of 25-30 pips. Long positions at 1.2658 or 1.2688 will be relevant only amid a false breakout. In this case, sterling will stay range-bound. Best of luck.